Good morning, traders. Chris Bus here with your morning look at markets for Wednesday, May 5th. Okay, quick look at futures. ES up 0.3%. NQ up 0.5%. Small caps 0.6%. Oil up 1.3%, continuing to break out. Gold and silver didn't see a whole lot happening. And then copper continues its ascent, up 0.63%. Today, what I want to do is, of course, see where we're at on SPY and the FATMAAN names. Then I want to show you a couple of commodity charts that I think will hopefully make an impression on you and open your eyes to kind of what's happening in the marketplace. So let's start with SPY. We had the gap down yesterday. Came down to this 411.50 area, and then they put in a V bottom, and it's continuing to bounce. Remember, this 416.75 was an area of support for all this consolidation, sideways trading. And we've got a gap from 418 to 416.75. So just one scenario is they come up through the gap and fill it and then get rejected again at 418, or just go ahead and break on out again like they've done so many times before on these V bottoms. The downside is quickly bought up because, hey, it's worked, for the last 12 years. So why isn't it going to work again today or yesterday? So anyways, I think this 416.75 is going to be key. That's the bottom of the gap. And I saw pre-market that SPY was trading right in that zone. So we'll see if they can punch through the gap and fill it. Here's SPY, the 30-minute chart. Here's your gap. Here's the move down to support that we had marked, 411.50. If you trailed your stop at any point along the way, if you got stopped out, that's fine. If you got long, say at the bottom or on the recapture of 414, that would have been a logical place to do that. You can see there's a little resistance here at 416. I think the real question is, does the market have enough horsepower to fill this gap here up to 418 and then be able to break out again over 418.50? I think it's important to note, I didn't make mention of it now, last slide right here, is that now we're on the wrong side of the trend, right? So the trend broke down. That put us on a sell signal. What would negate that sell signal is, of course, breaking out back above 418, 418.50, and recapturing this trend line. So we are on a 2-hour sell signal. So we'll see if the market has, like I say, the horsepower to come up through, recapture these overhead resistance levels and recapture the trend. Most of the selling pressure yesterday was on the Qs. It wasn't helped at all by Yellen making comments that, hey, the economy's getting really hot. We may have to raise interest rates. The market didn't really like that very much. That the downside had already started before those comments, but like I said, that accelerated the move. Came down here to test this gap at 327, had a little undercut, and now we're bouncing. I've laid the fibs on here. You'll see them on the next slide, probably a little bit clearer for you. But again, Qs are on 2-hour sell signal. And really what needs to happen to negate that is break back above 336, fill the gap and keep going, and then get up into the 337s, and then that would be a recapture of those overhead levels, and then put the bulls back in control of the tape. Right now, even though there's a healthy bounce going on, bears are still in control of the tape. Why? Because we're below trend, and they were able to break that yesterday. So watch for the bounce today. See if there's any rejection points where you can either eject your longs that you had bought down here. Maybe you bought some yesterday at the close or bought here on this bounce. That's fine. If you get up into 334 or any point along the way and you see or sense a stall out, you can get out of your longs and then rotate back short again. So here's the gap down. Gaps from 336 to 334. Here are the Fib retracement lines. You've got one right here at 330. We're above that now in the pre-market. You've got one, the halfback retracement is 331.54. And then the 618 retracement is 332.80. These may be places that you want to mark on your chart. You can either drop in your Fib tool or make a little notation on your chart where those locations are. I'll give them to you again. The halfback, 50%, 331.54. And the 618, 332.80. And then the bottom of the gap is at 334. So you can see that once we put in this double top, aside from this candle, which was a total head fake, we've been rolling over, and now we're below trend and on a sell signal. So we'll see if they can drive price higher and fill this gap. IWM came down here to the 200 EMA, and you'll recall that the 200 EMA on the 2-hour chart is the same as the 50 EMA on the daily. Came down here, put in a bottom. Now it's bouncing. The key level here is 225.50. That's where we had resistance here, and support here. So that's going to become resistance again at 225.50. Here's the Fib retracement levels with the gap marked. Your halfback location is 224. And for all intents and purposes, the 618 is the bottom of the gap at 225. So those are the locations where you could ride a bounce into and then look for a stall at any point along the way, and then you can rotate back short again. Facebook. Dropped back into its earnings gap, found support at 313. I think you can be long. If you took that long there, you're in good shape. What really has to happen for the bulls to kind of recapture things is break above 321.61. If you're not in it, that would be a buying location. 321.61 on the recapture of the original bracket. Remember, this was our bracket trade. So if price can break above back into the bracket, then your target, remember, is the top of the bracket at 331. So that bracket is $10 wide. That's certainly worth taking a shot at if price can prove that it can power through that resistance level. Apple didn't really put in as much of a bounce as some of the other ones. Seems to be pretty weak. Found support at this key level we had talked about at 127. We've got some overhead resistance at 128.50, and then the Fibonacci's come into play. I really think this halfback location at right around 130 to 130 spot 25 right here would be a location for a potential stall out, reversal, come back down. Otherwise, I think it's going to come back up to the bottom of this trading range, which then becomes significant resistance at 131.50. So I would keep those locations in mind: 128.50, 130.25, and 131.50 for Apple to claw its way back. If price were to lose 127, then that'll bring in a fresh wave of selling and come down to 125, 122.50. Tesla, what I did was drop in some channel lines that look, I mean, it's amazing. Drop those things in, parallel the whole deal, tagging the bottom here, 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 and here, all along the way, and that upper trend line being respected as well. I think you can be long against 670. If you're into trading Tesla, that was your buy location on the recapture of 670, that pivot that we've been watching for so many weeks and probably even months to this point. Your first target is halfway through the range at 687.50. And then if it can get through that level, back up to the top of the channel between, say, 705 and 710, come back into this area, that would be an objective place to certainly, cover your shorts, cover your longs, and then get back short again. And then if you get stopped out, if price can prove that it can pop through 710, then you've got you can get long 725, 740, and then 750 on the upside. So I just want to make an extra point about your intraday active trading. I think one of the things to always keep at the forefront when you're trading, a security, whether it be Tesla or whatever, when you recapture that level, that's a buy. That would also be a location for a stop if you had been short. So for instance, on this one here, let's say you didn't have your trend line in here and you had gotten short at the top of the range or, at any point yesterday, really. So we come down here, we're going down, and we break 670, that key pivot level. At that point, you've got to be thinking, given the selling pressure that was there, that we're going lower, right? So you stay in your shorts. There wasn't really any reason to cover. I mean, you could have taken your short off and say we're at support, but we went lower, and then at that point, when you start seeing the green bars, you say to yourself, okay, when do I know I'm wrong? When do I know that I need to cover my shorts? Well, it would be on the recapture of your first overhead key level. And in this case, it was 670. So on that recapture, if you didn't close down here, that would have been a location where you say, okay, my bias has got to flip from a short bias to a long bias. And this is all, just really quick intraday trading. If you're a longer swing trader, you may be saying to yourself, okay, we're in a well-defined downtrend. If that's you, where would you have to say the downtrend is over? When would you have to get out of your position? Well, it would be right here on a breakout above 710, because that's the first overhead resistance level that would prove you wrong if you had a short bias. So if you had shorted, back up here at these levels and you're working your way down, and now it comes back up to the top of the range, then you've got to get out right there at the on the breakout above 710. And if you're, let's just say you're not in Tesla and you want to take a longer term view, you could have bought at the bottom of the range and then becomes more of a solid long on a breakout above 710. And then you can move up all your stops to just below, and then see if you can get a trend trend reversal there. So, anyways, I just wanted to point that out if you're new, or just to refresh your recollection of how to handle those levels. Okay, Microsoft gap down on earnings, back tested the gap, went lower, back up to resistance, lower, and now yesterday a recapture of 247. And I think on the midday note we talked about that was a level where you should cover your shorts and potentially go long if you were interested in that. I looked pre-market and we were up towards 249. If you're not in it and we break above this 249.25 here, then you can get long against that level and look for 254 at the top of the range. Amazon's been really weak. Came down here, had a sell signal on a break of 33.50. Got the $50 move to 3,300 and undercut it down to 32.72. Now we're bouncing. That 3,300 was a key level to recapture. That's your long buying signal. Looking for 33.50 and then a potential gap fill here to 33.86. Now what I've done is put the fibs on this whole move after earnings to give you an idea where are the potential bounce level locations. We've got the first one here, 38% is right in the gap. So let's call that a gap fill, is a 38% retracement. Then your halfback is at 34.12. And then your 618 is 34.44. You can call it 34.50. So this is extended. It's oversold. Get a bounce up in here to 33.50, 3,400. See how it handles that, and then we should be able to tell whether the downtrend is gonna resume, or if this was just, a multi-day event and then the buyers step in and ramp it higher. Google had this, the earnings gap down yesterday below, kept on going. We said that 22.75 was the level that it had to recapture. It did that. Now it's up back into the gap at 2300. If you didn't buy here, that was another buying location. Now I think you can stay long against 2300, and your target is, let's see, target's 2353 at the top of this gap range here, back up to the top. And then if it recaptures that level, you can be long against 2353, move up all your stops and your strikes after you bought the dip. Netflix, continue to just look at the daily chart. I think that's the most important one right now. Below 495, I think, is a short, down to 470, and a breakout above 515. You can look for a $35 to $40 move up to fill this gap back up to the top of the box. So at this point, I want to thank any new viewers and listeners for spending part of your pre-market prep with me. I hope the levels help you in you executing some good objective trades at key locations. If you like the content, I encourage you to subscribe, hit the thumbs up, and then look over in the show notes. You'll find a link that you can subscribe to all my content, still free. I would love to have you. I'll send you a link to join our trading room. Always looking for good guys and gals to join our community. I think you'd learn a lot there, even if you can't participate during the day. Scroll through the ideas at night. You'll find tickers you never even knew existed and a lot of sharp setups. We got a lot of good eyeballs looking at different charts and posting stuff all the time that's helpful to trading. And then longtime listeners, I really appreciate you hanging with me. Hit the thumbs up and leave me a positive comment. That way other potential viewers will know that you value the content. So I wanted to show you a couple charts on commodities. This is the CRB commodity index. I've got data going back, well, I can get data all the way back to 1982, but this has everything from 1999. You can see this 180 goes back 40 years as support. In the early 2000s, this was the China-fueled ramp, got up to 473, and then since 2009, we've had a 10 or 11 year bear market in commodities all the way down. This is when oil was $150 a barrel, come down. We consolidated here for 5 years, and then we let go all the way down to 100. Now we've bounced back, recaptured 180, and most importantly, broken above a 10-year, 11-year downtrend line on the monthly. And now we're challenging this 202 level, which was the bottom in 09 and has served as resistance here in 2016, 2017, 2018, right across here. You break out above 202, 205, a lot of room to run. Bear markets don't last forever, and I think we're in the beginnings of a new bull market in commodities. I have the targets marked here, 230, 270, and 310. And you got to respect this breakout in my mind. And I also want to show you down here, oil, which is a large component of the CRB. Here's the comparable downtrend line on oil from the 2009 highs, and we're just breaking out right now. And I think oil can find, $75, $80, and who knows where it goes from there. If the dollar falls apart and really heads down, we could be back above 80. I can see that. So anyways, sea change in commodities. And I think right here, yeah, it would have been great to buy anywhere along this way in 2020, but really now's the breakout. So from that standpoint, we haven't missed anything. Metals and mining, this was a trade idea just from the other day. The breakout's proceeding here above 4150, heading for higher ground. And I wanted to show you this one as well. This is the monthly on the metals and mining ETF, breaking above 10-year resistance right here at 38. Next target 47.50, and then a breakout there up to 65. So I still think we can be long XME against 40, 41, depending on what your time frame is. I mean, this is one where you could go out to January of 22, just anchor a position, know where your stop is, and let it grind for the next 7, 8 months, 9 months, whatever. And, if you don't want to try to actively trade every little daily dip or wiggle, I think that would be a nice way to give you commodity exposure if you didn't want to, mess around with individual commodities. And it's always a good idea to know what you're buying. This commodity, or this ETF, is 50% steel, 15% aluminum, 14% gold miners, and 4.5% copper. I mean, if it's me, this is great. I mean, it's fine, but I want to get more copper exposure. It's taking out all-time highs on the metals market. So I think that has a lot of room to run. And I wouldn't want to just be sitting in this by itself, only having 4.5% copper exposure. So you can get, CPER. That's another copper ETF, CPER. There's Freeport. There's Southern Copper, SCCO, that are basically 100% focused on copper. I think those are good charts to take a look at. So let's wrap it up here. Hope you have a good day of trading. Let's watch the bounces. Let's watch for areas where there could potentially be some rejections and a move back down. But the bounce proceeds. And let's see if it can take out the overhead resistance and keep on going. Thanks for your time this morning. Have a good day of trading. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.